Hello, everyone. I'm Matt Clark, research analyst with Money Markets, here with your weekend edition of the Bull and the Bear podcast. Again, before we jump into anything, I do want to make sure you are subscribed to our YouTube channel. If you are not on YouTube, go to youtube.com, search Money Markets, find that green Bull and Bear logo, hit that subscribe button, and then you can also get that bell and get notified each and every time we put up a new video. If you're already on YouTube, very simple. Just hit subscribe, hit the bell. You're all set to go. We got a lot of stuff that we put out on YouTube each and every week, so you don't want to miss out on all that content. We've got the marijuana market update. We've got Ask Adam Anything. We've got Investing with Charles Sizemore, plus the Bull and the Bear podcast. So you don't want to miss out on any of that. Also, check out moneymarkets.com. That's where we provide you safe, sound, smart, simple, profitable investment information for your investment portfolio every single day of the week, including sending you out a free daily e-letter that has all that information for you in your inbox every day for free. And yes, that includes Saturday and Sunday. We do make Charles Sizemore work on the weekends because it makes up for his lack of production during the week. So yeah, I'm going to get right into it again. If you are on video, you can see I do have Green Zone Fortunes co-editor Charles Sizemore, as well as our chief investment strategist and Green Zone Fortunes founder Adam O'Dell joining me this weekend. Great to have us all here. It's been kind of hit and miss. Schedules have been kind of hinky of late, but I'm glad you guys are with us, and it's the three of us this week. Now I'm going to move on today quickly, because I think this is kind of an important topic to discuss. I know that, moving to South Florida from South Carolina, one thing that was a bit of sticker shock for us was gas prices. In South Carolina, the gas tax is very, very low. And it's indicative because the roads are typically very, very bad, which is what gas tax usually pays for. Moving to Florida, that increased. Well, we kind of got used to it, but then all of a sudden, gas prices just kind of went through the roof and touched on $3. I know in California, it's close to $4 a gallon. And there were instances where people were just lining up to get gas because the prices were moving up so high. And I know you guys have experienced kind of the similar types of things, and this all kind of centers around a theme, but I want to go around and kind of get your thoughts on different things that you've experienced out in the wild, if you will. Charles, what kind of things are you seeing out there? You're in Texas, by the way, just so we're very clear and geographically accurate. You are in Texas. So what are you seeing in Texas?
Well, I'm in Texas at this exact moment, but I've been roaming like a gypsy these days. But yeah, you hear about these shortages that are leading to price hikes, and particularly even in labor. And you're seeing this in the wild. I mean, this is not something that you're just seeing in a headline or in the statistics. You're seeing it in the real world. I was just in Orlando, and shame on me. I was the idiot that went to Orlando theme parks on late Labor Memorial. Wow, what holiday is it? Memorial Day. Thank you. Memorial Day weekend. I was that idiot who decided to fight those crowds. But they don't. We were at the hotel for a couple of days, and they said, for COVID reasons, they don't clean the rooms. And I asked the manager, come on, I mean, really, like, we're here for 5 days and you're not going to clean the room for COVID reasons? He's like, man, I'll be honest with you. We don't have the labor. And this was a nicer hotel. This was not, some flea bag motel or something. This was a decent hotel. And he didn't have labor to clean the rooms every day. So they were kind of using the COVID thing as a convenient excuse. More recently, I had a buddy driving through Oklahoma to get back to Texas, and there was a big sign at an Arby's fast food joint, of all things, that said, "Do you need money? We pay daily." They're so desperate for labor there that they're offering to pay daily, like not even weekly or bi-weekly, daily.
Yeah, I don't know. I don't know of any places that pay daily. That's so unusual.
No, usually that's like day labor for, you need somebody to dig a ditch or something at a construction site. You don't think of that as like semi-regular employment, but that's how desperate, that's how in short supply labor is right now.
And I noticed that just about everyone, and I mean everyone from fast food restaurants to grocery stores, retail stores, are all offering $500 sign-on bonuses if you go to work for them. It's unreal. I've never seen anything like that. Adam O'Dell, you are with me here in South Florida, not with me, but you are in the same vicinity. What have you seen in your travels and out in the world?
Yeah, so I have a 7-month-old, so I'm not actually getting out in the world all that much. But in that vein, we actually order most of our groceries through Instacart. And prior to the last 6 months or so, we never had any issues with, we basically put in our order and the person shopping for us would find everything and whatnot. So I brought some props. In the past month or so, here is my espresso that I drink every single morning.
Ooh.
And I haven't been able to get this for several weeks. So I'm kind of trying to hoard that. So coffee seems to be in short supply. These are my wife's favorite snacks. These are roasted salted cashews. And I have a number of pictures from the Instacart people where they take a picture of those big bins of nuts that you kind of pull the crank and they come out. And so those were empty for several weeks. So there seems to be a shortage in cashews, roasted salted cashews. I didn't bring a prop for this one, but we installed a porch swing on our back screen-in porch. And I had to go to Home Depot for 4x4 because the chains weren't lined up with the joists. So I had to do some cross bracing. And I was really surprised with the price of lumber there. A good thing I'm not actually doing a full renovation or, God forbid, building a house right now. But I did notice that the price of lumber was up a good bit. We've talked about that in the past. So it's interesting whether it's in the food or in the construction industry. We've talked about computer chips before, CPUs and GPUs. That's obviously a huge shortage there. So it seems to be across the entire supply chain, which isn't too surprising because COVID was really a global all at once, pandemic and market disruption. So I think it'll be here to last for a while, but I'm interested in hearing your all's take on how long it'll last as well.
Well, this it kind of dovetails nicely into where I was going here. Now, obviously, prices are up for a lot of different things: gas, lumber. We've talked about all these things, and labor supply. People just. And you can equivalent it to whatever you want, whether it's that people were getting paid more by getting unemployment checks with COVID stimulus than they would make if they went back into the workforce. Whatever, we see a lot of states that are ending that, however that may be. But and it's easy to blame politics, I think, for why you pay more today for what you could have bought a year ago, or why things aren't on the shelf. But it goes a lot deeper than politics. I think it's kind of important. And I'm going to take a little bit of a history lesson. I'm going to give you guys a little bit of a history lesson, not you guys, but I think in general, I think you guys might know this. But what we're experiencing has actually a term because it's not new. It's called the shortage economy. And this phrase has been around for a long time, but it was kind of made into the mainstream back in 1980. Hungarian economist János Kornai actually wrote a book, and he was referring to, I believe, shortages in bread lines and things like that in Eastern Bloc countries. But it's basically the shortage economy is a way to describe frequent and chronic shortages of goods and services. In economics, as most people know, when demand for product outpaces supply, the price of the product goes up. That's kind of how it works. Now, I pulled some figures, and I want to show first the price of lumber futures. This is basically buying a board foot or FBM of lumber. A year ago, a board foot of lumber was selling for about $363. Which is, kind of in line. That was just out of the COVID crash into the summer. Things were starting to pick up in terms of a little construction. Things were being loosened a little bit. Now, today, that's $363. Today, that same piece of lumber on the July 2021 future will cost you $1,206 a board foot. That's a 232% increase in price. And Adam touched on this a little bit when talking about homes, so that it means the cost to build anything, houses, backyard sheds, tree houses, porch swings, whatever, costs you way more today than it did even just a year ago. And that's not the only commodity. I also looked at West Texas Intermediate crude, the crude oil that we have here in the United States that's used to make gasoline for our vehicles, and also many other things. Crude oil is not just a gasoline product. It is used for other things, but it has also jumped in price. A year ago, 1 barrel of West Texas Intermediate crude, $35.44. Okay, remember that. Today, based on the July 2021 future, the same price of oil, $68.78 a barrel. That's an increase of 94%. Now, to put all that, first off, the lumber is very high. West Texas Intermediate crude, however, that's not an uncommon price point at $68, $65 to $62. That's, kind of in line with where we were pre-COVID. 2018, 2017. That was kind of where those barrel prices were. So it's not necessarily that we're seeing a shock to the system. It's just whenever you experience such low gas prices and such low oil prices, then all of a sudden you see this 94% uptick in just 12 months time. That is a shock to the system. Suppliers are playing catch up on demand. We talked about semiconductors, Adam did. We've talked about it before. Chips being used, everything from smartphones to automobiles. The supply of semiconductors are so low that U.S. auto manufacturers have threatened to trim production, which is going to drive up the price of cars. It's a slow grind because demand continues to be higher than supply. It's going to be that way for a while. So I'm going to ask both of you, first off, London School of Economics trained Charles Sizemore. Again, we talked about this concept that the shortage economy isn't new. So what does history really tell us about what we're experiencing right now?
Well, if you really want to do the history game, look at Thomas Malthus. He pre-industrial economist that believed that the world would starve because we had population growth out of control and limited resources, and eventually the price of these resources would get to a point where poor people couldn't afford it and they would just die. And it didn't work out that way, of course. The Industrial Revolution happened, capitalism worked for them. It didn't work in the Eastern Bloc, of course, but they didn't have capitalism there, which is why it didn't work there. But the capitalist system did what it was supposed to do. Like, it increased production and met demand. When supply rises to meet demand, you no longer have a shortage. In fact, if supply really gets underway, you have surplus, which means prices fall. That's really been the reality for most of our lifetimes. We were all born in the 70s, and the 70s were not a good decade economically. There were upheavals then, but for most of the 80s, 90s, 2000s, 2010s, it's been a time of abundance. It's actually been a time of too much supply, arguably, and kind of persistent deflationary trends. So what happens? What happens now? Well, the Fed insists that all of this inflation is transitory. That's the word they use. We'll see. Inflation, there are things that are sticky and there's things that are not. Wage inflation tends to be sticky. If you raise somebody's, this guy that you could have gotten for $5 an hour before, because of the labor shortage, you're having to pay 10 or 15 now. It's going to be really hard to get him to take $5 again in the future. Now that there's, once the labor supply comes back into balance, it's going to be really hard to push wages back down, right? I mean, once you get used to making a certain wage, you're used to it. You don't want to go back down. Other things really are flexible when the price of crude oil rises or falls, gasoline rises or falls with it. It's those prices are not sticky at all, but some consumer prices are. Producer prices, for the most part, they're not sticky in the slightest. Lumber, I have no doubt lumber will be cheaper a year from now, but the price of the house that was built with that lumber may not. That difference may just be the profit that the home builder keeps. So this will be resolved, but some of these price hikes are likely to be permanent.
And so I want to look at this more from an investor's perspective, because that's kind of what we're about here, is to take these ideas and these trends and what we see and kind of bring that back to an investor level. And Adam O'Dell, is there anything that you see here that investors can focus on or look at within their portfolio or even outside their portfolio to kind of work within this shortage economy that we're experiencing?
Sure. I have a very pragmatic, practical solution, but before I get there, let's back up to it. Now, I didn't go to a school that has a school of economics in it, but I know a thing or two about economics. And two ways that I look at it is, one, supply and demand. Anytime that demand outstrips supply, meaning there's more demand than there is supply, you get rising prices. So that's kind of economics 101. The second part of that, maybe economics 201, is the saying that the best cure for high commodity prices is high commodity prices. And that's one of those riddles that takes a bit of explanation. Basically, that when commodity prices are high, that induces or entices commodity producers to ramp up production. So whether it's a gold miner or an oil driller or a chip maker, it incentivizes them with a higher selling price for their end market goods to ramp up production. And so that ramp up production brings on more supply, and then suddenly that imbalance changes so that you have more supply than you have demand. And anytime you have more supply than the demand, then the price goes down. And that's why they say the best cure for high prices is high prices. Well, what they never said in that theory is the length of time that it takes for that cure to happen. Okay, so if it's something like a chip manufacturer outside of the Bitcoin world, where Chinese miners are just basically buying up every CPU and GPU, before it's even built. Outside of that, a chip maker might be able to ramp up production pretty quick. They've got these automated assembly lines and they can probably do it fairly fast. But what about the lumber market? I mean, it takes about 80 years for, the pine up in Canada and the Pacific Northwest to grow to a certain size. And then it takes a good amount of time for them to mill that. And so they can't just ramp up production overnight or even in a matter of weeks or months. So my point with this is saying that I think that this imbalance is going to last a lot longer than most people think. I think that the high prices in commodities right now will be cured. I think that supply will come online and demand will level out from the kind of V-shaped recovery, as far as the reopening. But I think it's going to take a longer period of time than most people expect. Most people expect these things to happen overnight because, as Charles said, most of us were born in the 70s. A little bit of a correction. I was born in the 80s, very, very beginning of the 80s. But nonetheless, we lived in an economy where
he's just a baby.
Just a baby, right? But I think his point was we live in this modern age of where the industrial world is supplying everything that we need, and we don't really have an experience in our own lifetimes of these major shortages. Maybe in pockets of the supply chain here and there, but across the global supply chain, this is really the first of its kind as far as observing this. So I think it's going to last longer. What you can do, practically speaking, is have some exposure to commodities. So buy either an oil ETF or buy a broad, diversified basket of ETFs. Commodities in the form of an ETF. If you look at the 9 stock sectors year to date, there's only one stock sector that's up more than DBC, which is a broad commodities-based ETF, so that it has exposure to oil and agricultures and things like that. There's only one stock sector that's up more than commodities, and that is the energy sector, which is heavily commodities based, basically. So I would definitely gain some exposure to commodities right now. I think it's going to last longer than most people expect.
And I tend to agree. I think, and like I said, I go back to, and I mentioned politics because I know that's a common cop out. That, it's because of this or that or the other, who was elected, who's in Congress, who's not in Congress. And really, at the end of the day, if you think of it on a realistic level, that's not necessarily the case. I mean, it may play a very minute part of it, but at the end of the day, it's the actions of the consumer and it's the actions of the producer.
Matt, by the way, there is nothing new under the sun. The Viking King Canute that ruled England for a while, he got so sick of all of his courtiers saying, we have this problem, fix it. We have this problem, fix it. He had the court moved to the coast. They went from London to the coast, and he very theatrically got up and commanded the tides. And of course, the ocean did not respond. And so he turned to his courtiers and said, see, I can't do it. I can't do everything, guys. Leave me alone. So
I just want to put in perspective that is the well-paid, well-balanced education from the London School of Economics that just gave you that anecdote.
I got that from a fortune cookie,
whereas I went to Johns Hopkins, go Blue Jays, and Adam O'Dell, he did not go to London School of Economics either, and we have no tales of Viking lore.
Well, it's a good anecdote. Okay, so. Anyway, pick a president, Biden, Trump, Obama, whoever, just pick one. And they can't command the tides either.
Exactly.
No matter how hard they may try or not try.
Yeah, I mean, like I said, you have to look at this from an economic perspective, not from a political perspective. And economics, as we've talked about over and over and over today, is that when supply is less than demand, then prices go up. Vice versa, when those things are flipped. When the supply is high, demand is low, prices go down. So it's, it's very simple. I mean, again, there's much more to it than that, but in terms of boiling down to its most simplistic, that is about as simple as you can get it. So we'll close out with that right there. I want to go around the room real quick, get some final thoughts. I know there's been a lot of stuff going on this week. AMC, there, still labor shortages, labor issues, things like that. We've seen just a lot of stuff over the course of a very short trading week, interesting enough. So Charles Sizemore, parting shot for the weekend.
No, I would just say I agree with Adam on the commodity play. I think that's really where you want to be. The last time we had anything resembling a shortage economy would have been the 70s, and commodities did phenomenally well. So I do think that's a very nice trade that has a lot longer to run.
And obviously all that happened before Adam O'Dell was born in the 80s, as he so quickly pointed out. To just
I don't blame him.
Just reiterate the fact that Charles and I are old and he's not.
82, so just barely.
I have a retort for that, but I'm going to leave it. I'm just going to let it go, just because I don't want to do that. Adam O'Dell, parting a shot for the weekend.
I'll just say that you mentioned AMC. The stock doubled yesterday, and it's up thousands of percents. I'll just
3,000%.
Yeah, 3,000. It's crazy, right? So I'll just do a plug for my Ask Adam Anything series. We did get somebody to write in, I thought, a pretty funny question, and they asked, are meme stocks immoral? And so we're going to be tackling that question, I think, on Monday. So tune in for that if you're interested in meme stocks and whether they're immoral or not.
It's interesting. And I did talk about AMC in our midweek version of the Bull and the Bear podcast, kind of right in the middle of Wednesday's high price action and the halting of trading, at least I think 3 times. It might have been only 2 during about a 20-minute span. The market's halted trading of AMC. Very interesting. You can check out that video. You can check out that on our podcast channel. Just go to your favorite podcast indicator and you can listen to that. That's Apple Podcasts, Google Podcasts, whatever. Same thing applies. Just check out Money and Markets. You'll be able to find us, Green Bull and Bear logo, subscribe, all that great stuff. So guys, appreciate it. Thank you so much for joining me for the weekend edition of the Bull and the Bear. We've got a lot more coming up. Adam has already talked about Ask Adam Anything. I get to sit down and ask him anything that you want. I love it. I get to stump him, make him laugh. And I think at one point I made him hold his head down in despair, because I don't think he expected the question I asked him. And if it hasn't happened, it will. Also, Charles Sizemore has Investing with Charles Sizemore. He runs through a battery of stocks, tells you what he thinks about them, whether they're good for you, whether they're bad for you. You definitely want to check that out. That comes out every week as well. I've got the marijuana market update that comes out, and we talk about the marijuana stocks. We also do have a new join feature on YouTube. Definitely encourage you to do that. If you're on YouTube, just look up on our page and you see a little join button. If you click that, you'll be able to get access to much more content that we provide on YouTube. Just go and check that out. I encourage you to do that after you're done watching this video. So we've got a lot more on the way. Check out moneymarkets.com. Sign up for our free daily e-letter. You'll get access to all of that great, safe, sound, smart, simple, profitable investment information every day sent to your inbox for free. So for Adam O'Dell, Chief Investment Strategist and founder of Green Zone Fortunes co-editor Charles Sizemore, I am Matt Clark, Research Analyst for Money and Markets, wishing everyone safe trading.